really handle international traffic, very constrained by oil refineries and paper mills. It just wasn't the kind of place you could set a new future. So Dube TradePort was developed in the north of the city to primarily restructure and realign the air cargo element. So we took a particular focus on air cargo, and where we've ended up now today is Dube TradePort owns and operates the cargo terminal. So as a state, the idea is to create optimum efficiencies, cost efficiencies, service efficiencies, one-stop shop, and we've been doing that for the last decade. And we've seen consistent growth, other than for this dip during COVID, very strong and consistent growth. And we've recreated an epicenter. So what we essentially did is said, let's take care of the air cargo industry in KZN, in Durban, and let's put them where they should be, because increasingly supply chains around the world, they might only rely on air freight 2, 3%, 4% of the volume of cargo they're moving, but very often that reflects 30% plus of the actual value, and often very critical to the operations of manufacturing processes and supply chains. And we have consistently added value to that, and including a niche trucking division, which adds an extension element to our cargo terminal, and increasingly, obviously, our industrial and logistics zones. I watched the two presentations with great interest. I think the warehousing and logistics was spot on, and we're seeing a lot of that. And we've got some of those big companies like DB Schenker with facilities at the airport. But I think increasingly as well, the digital is a huge element. The electronic, let's call it transactionary environment, and everything that supports it. But it hasn't been smooth, and I met, and certainly not so much from our perspective, but what I've noticed in the industry is it just seems, I don't know whether it's been a huge burst of growth, but the traction of the electronic environment hasn't been probably where it should be, certainly in South Africa, but possibly across the continent. And I visited one of our clients the other day. We had to address quite a basic set of problems around their trucking and stacking of their trucks. And it shocked me that the way that industry was working was sometimes the orders and the dispatching of trucks, because they're happening in two separate areas. A salesperson is selling a huge amount of stock, buying that stock space in a warehouse. And the trucking division is just, because the trucks are so difficult to get hold of, the trucking division is just sending trucks. So this logistics company is saying, we don't know what truck is going to arrive outside of our door to pick up a load that's been sold. Because they're fast moving, so this particular company holds stuff for sometimes quite short periods of time. They're not really sure, and we were trying to resolve a stacking and a congestion issue, and we literally went outside the gate, and the truck arrived, and by the time we had finished the meeting, there were 7 trucks outside. And that was a simple matter and the engagement we're having with them is in that particular instance, that no one's talking to each other, no one's really coordinating and bringing that information to a central point, and it creates real problems down the line. So I think the resolving the paperless and the electronic system is critical to our future going forward.
You want to chime in, John? Well, it's very much the point that I was making. Which is
the private sector will come in at a point where the risk and reward have achieved a certain balance, and the capital cost against the reward against that capital cost of the creation of value falls within a certain realm. But prior to that is where government steps in, and you take a long-term view, either based on a master plan or a longer-term recovery strategy, where you say, we know that, for example, to build up the volumes of cargo through our cargo terminal, we can't go in on day one at the kind of pricing that you're going to achieve somewhere else with a huge return. And if you were financing the deal purely with private money, you would have to get that return, let's say, over a 10 or 15 or 20-year period. Whereas what you're trying to do is play a developmental role and a commercial role. So you're trying to play a role where you say, we need to keep our tariffs on cargo handling at an affordable rate, at an achievable rate, so that we can grow the volumes, stimulate the industry, get it up to the level. We'll take the return later down the line, but it's cost that we'll absorb. But from day one, we start with at least an idea of how we want to get a return on that capital. But essentially what it will boil down to is you'll push out your return date much further down the line, but you'll achieve the benefit of the broader impact on the economy. And I think if we can get more and more and more of those kind of projects occurring in the key points across the continent and tie those up in terms of the logistics chain, we can hopefully then dramatically reduce that logistics cost. And if we can do that, I think we're really onto something in terms of implementing the agreement.
Right. All right, Neville, if I can come back to you.